Hi everyone, it's Matt with EquiPredict Analytics. Today we're going to be taking a look at some fixed cycles in the S&P 500 and determining what they can tell us about trading opportunities using the fixed cycles on the daily chart of the S&P. And again, just briefly, if you're enjoying some of the content we're providing, please do subscribe to the channel. You can also, I recommend, head over to our website and check out some of the information we have regarding market forecasting. There's a whole bunch over there you can read about. There's some market insights that are unlocked for folks who are not subscribers. You can learn about our subscription service as well as our proprietary forecasting model. We have our red wave, blue wave, and green wave models over at EquiPredict, and just give you a quick sample of how our red wave models work. This is a forecast that was done for Caterpillar going back to early of 2025, and just gives us an understanding for some cycles that are in Caterpillar with a blue wave forecast towards the end of April or beginning of April going into middle May. This is how it actually turned out, so you can actually see that the cycle stays the same, the price action obviously moves, and let us know that going into January 2025 would see a high. This was likely a break even, potentially a small loss depending on where you end up taking on your position, and this blue wave forecast worked out great in conjunction, in agreement with our red wave forecast. So that is how our red wave forecasts and blue wave work over at EquiPredict Analytics. So it's equipredict.com. So up on the screen, we're going to take a look at the S&P 500 daily chart. We are using fixed cycles with a second harmonic, which is those smaller cycles within the larger cycles. And what we did was essentially just choose a random point in time that we call an anchor. It's a point in time where there was a significant low in the equity, in this particular case the S&P, and we chose August of 2024 and just examined how that cycle stretches out over time and hits other cycle lows and other cycle peaks going backwards and forwards. And just give you a kind of an example, this cycle hasn't changed, it's fixed, it's not adjustable, it's repeating. You can choose your anchor and then stretch it out to your first cycle. We just simply chose the first cycle low, which was the early September 2024. But what you'll see is if you go back in time, these cycle lows do an excellent job at picking out prior cycle lows. Same thing in the future as well, which I'll get to. And so what you'll see is we're still sticking to the anchor of 2024's August 2024's low there. But if you go back, you're going to see that some of these lows in the cycles were hit perfectly going back in time. For example, here, going all the way back to October of 2023, right there. And then again, right before that. So what happens is, with these cycles, for those who are newer, these cycle troughs can help you find points in time which are great trading opportunities, short-term trading opportunities to take on a long position. They aren't perfect because cycles aren't perfect, but they do generally give give you calendar dates where you can go on and take on long positions, for example, here in the S&P 500 on a daily time frame, and let you know you can ride them to cycle peaks, potentially even into a next cycle low if you're in a bull run. This 18 period, this pink line here is an 18 period moving average. It just gives us some guidance, and I'd recommend tying in moving averages into your own trading strategies. An 18 and a 40 is great to use. You could use a 20 and a 50. I typically use an 18 and 40 because they're a bit faster to use for more folks who are more actively trading the markets. But what this does is, if it's pointing to the upper right-hand corner of the screen, lets you know that you should be thinking in a bullish mode versus a bearish mode. And so as we got to this, just a brief example, as we got to this sort of the December peak, what you can see is oftentimes whenever these cycle lows, these fixed cycle lows are not met with sell-off into the cycle lows, going into the peak of the next one is generally more bullish than it would be if it had fallen into that trough. So I hope that sort of makes sense. The 18 period was moving upwards. The price action didn't meet that cycle low. It actually sort of traveled, kind of meandered into it, and then it got a nice boost into the next cycle high going into mid-December of 2023. And so that's sort of how these fixed cycles work. And I'll just fast forward in time. And what I just want to point out, what you're also going to see is that you're going to see gaps. I purposely do that. I look at the total trading, the total calendar in its totality. I don't use, when I'm doing an examination for fixed cycles, I don't use the trading days because the futures trade over the weekends. I think it opens on 5 o'clock on a Sunday, closes around, I think, 5 o'clock on a Friday. But during the weekend, you have information before you get to Monday that's going to affect how the futures behave over those weekends. So I like to use the actual total calendar as opposed to just trading days. If I turn off the time factor and just look at the bars, you're going to see that those gaps are closed. So what you're looking at here is each one of these is just as simple as a trading day. There's no weekends, there's no holidays. But if I turn on sort of my time factor, you're going to see that down here below, for example, in going into late February, there was a Monday holiday here. That was a third weekend day that was calculated that wasn't used by Wall Street. Wall Street was closed that day. But obviously information was rolling in that was going to have an effect on that Tuesday's trading day. So the bottom line is I like to use the entire calendar, not just the trading days when I'm doing our fixed cycles. So let me just forward ahead here, and I'll move past our anchor and kind of talk to you about what's happening right now. And again, what you're going to see is if you watch these sort of cycle lows, here it started to get real choppy going into October, November 2024. You had a cycle low where you would have broken even. If you held on a couple days, you would have profited, but you meandered again into the next cycle low and off to the races it was, and a strong boost into the next cycle high here early December of 2024. This is when this right here, this candle that was a real steep candle going into December of 2024 told you that this particular cycle low in a few days' time ahead was likely not going to be as robust as you'd expect because this was such a large sell-off. So for folks who are newer to trading, I would definitely recommend you look into candlestick patterns, learning about. I use OHLC bars consistently. I think they're very easy and easy to use, easy to read. I can read them faster than candlesticks. One thing also to note is that as you see a choppy price action here in late 2024 and 2025 really was a harbinger for what was likely to head here. This is obviously the mid-February 2025 sell-off. But whenever you see sort of this wild price action, it's the market trying to calculate and adjust with new information coming in. It's typically a great time to stand aside and not necessarily take on sort of cycle trading unless you're more of an aggressive trader. But nonetheless, they still work. If you got to this cycle low here, you would have broken even. Again, if you might have sold off here or taken a small loss, wait until the next cycle low, which was late January 2025. Again, another profitable trade there. So this was, if you waited for this one, for example, here in early March, you would have broken even if you waited till a cycle high in mid to late March of 2025. And if you look actually here, how perfectly the fixed cycle comes into the major buy point that was in early to mid April of 2025, the cycle met it almost perfectly. So here we are today, and I want to point out, as I mentioned, if you sort of meander or rise a bit into these cycle lows, typically the next rise is going to be quite bullish. That's oftentimes what happens, and so that tells us that we might be seeing a nice bullish bump into the next week. That's a strong possibility, but I think the sell-off going into late June might be more muted now that we've meandered into the cycle high here, or we've meandered into the cycle low in a bit of a rise, and the 18 period is moving upwards. So this could be an excellent buy point right here for a nice bullish run going into July. So what we're going to do is wait for the trading week to be completed, maybe possibly the next 1 or 2 weeks, and we'll do another as we approach this cycle low. We'll do another video. We'll leave the fixed cycles just the way they are. And so that we're not adjusting the cycles in any way, and we'll do an update. So definitely subscribe to the channel so you can get an update. And when we do that, when I do that post in mid to late June, to see where we're at in terms of the fixed cycles. So I hope that helps. Good luck and good trading out there.